Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry. Today is Friday, October 15. The time is around 2 a.m. GMT, and today we're going to be updating the chart of gold. This is a 45 minutes chart. Now gold in the in the medium term is it has a pretty complex structure right now. Now long term we've been bullish, and if you guys have been following us for a while, we did seminar from last year and so on. We have already mentioned that the precious metals commodities overall is in a bullish cycle in the largest time frame. Now, medium term is where things get a little bit not clear. As of today, we still need more data to figure out for sure what's going to happen. But here, our primary concern is going to be in the shortest time frame, right? The shortest time frame. So here we got gold. Look, gold has been rallying here, and as you can see in the 45-minute chart, we calling this connector here W and X, which basically by looking at this, you can conclude that this rally is corrective, right? Because otherwise it would have been 1, 2, but the fact this is WX suggests that we are considering this rally as a corrective structure still, which basically means medium term still can see more downside if it is a WXY. But again, medium term we will not really dig too deep on that because it is not as clear. The shorter cycle is the one I think that is more clear. The shorter cycle here is very simple. It's looking for more upside while the pullback stays above 1748. So you're looking for 3 pullback here to correct this 5 days up, and then from here we expect more upside again in gold in the shorter cycle. So in this sense, the shorter cycle remains bullish for now in gold, okay, as long as we stay above 1748. Now we can look at the larger time frame a little bit to get an idea what sort of target can we expect, and why is it that the rally is still being labeled as WXY, and I will explain that over here when we look at the 4-hour chart. Now first, let's put the label here in the 4 hours. So this is our W here, and this is our X here. So what we're looking at here is a simple 3 swings rally from this low, right? This 1, 2, 3 right here. So we have a target towards this area. 1809, 1846 is the 100%, 161.8% extension from this low right here. Now let's check out to see, is it possible, like why is it that this is correction and it's not a new impulsive structure or anything like that. Now first of all, take a look at this move down from here, right? It does look like a 1, 2, 3, 4, 5, right? Now I know there is an overlap, but that is okay in a diagonal. Now if this is a 5 waves, let's check out the divergence. We do have a divergence at the lows here, right? Downgrading on the 1 hour, let's check out. Now on the 1 hour also has a divergence right here. Look at this. This low and this low, RSI, this low and higher lows. So because we do have a divergence here, that suggests that it is reasonable, it is valid to count this or to consider this as a 5 waves, diagonal of course, as a 5 waves, 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, and as a result, um, if this is a 5 waves, then you can technically still fail. This could be just a correction, and then it can still fail as long as we don't break above here. Of course, we can still fail and go down again once we reach this target area. But like I said, the medium term is not entirely extremely clear. Now, for example, if we break above this peak, so what's gonna happen? Well, if we break above this peak, we could, for example, label this as a 5 ways down here. So this 1 2 3 4 5, and label this as, let's say, with A. It's not likable, it's not as good as labeling the entire move as a 5 ways diagonal, but let's say if we break above here, then we could try to label it this way, right? 1 2 3 4 5, and then this C here is also 1 2 3 4 5 diagonal, and then finish. So then if this is a 3 waves, if you label it as a 3 waves, then suddenly this entire thing can be a correction, and then this could be a new sort of a bullish leg. This could be 1 2 1 2, and then 3 of 3 and continue to go up, right? But for now, for today, it does look, so like I said, you got options here, but with the divergence here, it looks better if labeling this as a 5 ways down, and as a result we still cannot rule out another leg lower. That's why it is a WXY. However, like I say, if it breaks above here, then yes, we can change this into corrective, and then this can become impulsive. But again, the concern, like I said, the one that is a little bit better in terms of the clarity is going to be in the near term, in which we are expecting more upside as long as gold stays above 1748 in the pullback here, with the minimum target on the upside towards 1810 approximately, right? If we break above here, then that will open up even more upside in gold, and we can easily go to the next 100% here. We can go to 1873 to 1968 if we break above this peak here, 1833, right? So it's step by step, but for now, looking for more upside in the shorter cycle above 1748 in gold. All right, so that's the update for gold today. And as always, if you do want to get regular updates on gold or other precious metals, commodities, indices, stocks, and so on, feel free to check our service. We have 14 days trial, and the link is provided in the description of the video. See you all again next time. Have a nice day, everyone.